You might know Cathie Wood as the matriarch of Wall Street, a woman who proved that integrity and diligence ultimately win out over the sometimes sleazy antics that have dominated the culture of high finance. The founder of ARK Invest, and the breath of fresh air that all of us need during this tumultuous time. Hello future billionaires! Welcome to Pennystock Lifestyle, the channel where you get stock inspiration, motivation and knowledge to become the future billionaire. Today, we will speak about some of the penny stocks owned by Cathie Wood, who delivers reasonable targets, backed by even more affordable and well-researched theses. ETFs were initially designed to offer a low-cost method to invest in the whole stock market. However, there is an ETF revolution going on, and Cathie Wood's ARK Invest actively managed ETFs are more popular than ever after more than doubling in value in 2020. ARK's goal is to focus solely on disruptive innovation while adding new dimensions to research. ARK uses an approach that cuts across sectors, market capitalizations and geographies, according to the description of ARK's official website. ARK focuses on a large-scale investment opportunities in the public markets, resulting from technological innovation centered around DNA sequencing, robotics, artificial intelligence, energy storage, and blockchain technology. Given Cathie's success, intelligent investors are following the moves ARK Invest ETFs make. For instance, the popular ARK Innovation ETF has delivered stakeholders over 145% in the trailing year, including the recent volatility that has disproportionately hurt the technology sector. It is clear from this example that Cathie Wood is thinking not only about the upside potential, but mitigating downside risk. Her now uber-popular brand was named after Ark of the Covenant. Cathie Wood founded ARK Invest at the age of 57 and also at a tough time in the investment markets. Cathie was able to persevere against the odds warrants consideration for the stocks that this financial juggernaut is buying. Having one of her best years in the history of professional money management, Cathie Wood sees 20% returns after unbelievable 2020. "Oh, it's been unbelievable," said Cathie, when asked about what it feels like to achieve such a milestone in her career in an interview with Bloomberg. "The coronavirus created a tremendous number of problems, and our portfolios are all about solving problems," Cathie stated. "Our investors have been rewarded for helping to solve some of the world's most profound problems," she added, talking about how she and her company made their investors earn despite the pandemic. Directly speaking, Cathie mentioned that whenever things have gone well for her, usually there's a correction waiting around the bend. She said that when this correction comes, she wants to be prepared, that she must protect the earnings on the table, and to also prepare their investors for the possibility of acquiring some losses, and say just keep some powder dry, because what we're looking at here are long-term exponential growth trajectories. According to Cathie, no one can stop progress, so people must learn to embrace it. "I just have to keep my eye on the prize," Cathie exclaimed, saying that we must always expect corrections and we must be prepared for modifications. Nothing is straight up in the investment world, and we will always experience these corrections. For Cathie, sometimes investors must take a bit of their money off the table and keep some powder dry to protect their investments from getting burned by these pullbacks. When asked about being concerned about the consequences of having a bad year, Cathie responded confidently, "One bad year would not worry us. Our investment time horizon is 5 years." She also emphasized that they have projections that they develop from the top-down approach, trying to understand how technologies are going to scale, and from the bottom-up approach about how companies will embrace these new technologies and ride their coattails. "For the next 5 years, we believe that our returns will compound at an annual rate of something in the 20% range," Cathie projected. Traditional equity returns have been in the 7 to 8% range over time, which is why they believe there's still a lot of room or runway ahead. She made Amazon an example of the stock she bought in the early 2000s, where people derided her decision to buy because of the thought process that focused on tech and telecom. She highlighted that their portfolios right now are filled with Amazons, like a seed planted in the tech and telecom bubble that's been gestating all this time and is now trying to break out to growth trends. Talking about Bitcoin, Cathie and the ARK's position on this particular asset is currently worth 7% of their total equity. She said they are still optimistic about Bitcoin despite being at $20,000, then down to $17,000 and even below $4,000 earlier this year. They are still confident because they learned that Bitcoin threw off total income, which is not illegal. "We are extremely bullish. our confidence has gone up since 2017, because what we saw as it dropped from 20,000 to below 4,000, it actually got well into the threes in 2019, she added. Bitcoin is the reserve currency of the crypto ecosystem, which is very important. It's the flight to safety currency. Bitcoin's blockchain is the most secure of any other blockchain. Now, let us look into a few of the stocks Cathie owns. Number 1. Protolabs Inc. Protolabs Inc. (PRLB) is a 3D printing company that returned more than 50% in 2020. Cathie Wood had a nearly 3.1 million share position at the end of September, making PRLB her 10th best stock to buy for the long term. The position was $400 million at the end of September, but its current valuation is around $470 if it left unchanged during the fourth quarter. Prominent hedge fund managers have been shunning the 3D technology company, as the total number of bullish hedge fund positions stood at 16 at the end of September. The second biggest hedge fund equity position belonged to Motley Fool Asset Management at less than $6 million. Number 2. Lending Tree Inc. Tree. Cathie Wood had $413 million invested in this stock at the end of September. Again, she was by far the most bullish fund manager about this stock. The second largest equity holder of Tree, TREE, in our database was the quant hedge fund 2 Sigma, with a position valued at less than $13 million at the end of September. Lending Tree, TREE, $2.6 billion market cap, based in Charlotte, NC. The company operates an online marketplace for all types of consumer loans, including mortgage, home equity, auto, personal, and credit cards. Tree also offers a marketplace for all types of insurance and deposits, matching over 700 lenders with millions of consumers. Tree is not a balance sheet lender itself, thus assumes zero credit risk. Tree enjoys around 31% share in its core market, generates strong margins, and is led by an owner-operator CEO, who is the second largest shareholder with 13% of the stock worth around $500 million. The company is in the early stages of penetrating a large mortgage market opportunity, with room to grow from its current less than 2% of the annual mortgage originations. Tree should benefit from the secular shift by domestic financial services firms shifting ad spending to online. We initiated and then added to the position during the quarter, with the stock trading at an attractive discount to fair value. Cathie Wood probably believes that Tree will disrupt the mortgage origination market. Number 3. Teclado Health Inc. Cathie Wood had $441 million invested in this telemedicine stock at the end of September. TDOC shares returned more than 130% in 2020. Telemedicine offers a convenient and lower-cost alternative to medical office visits, and may even help lower overall medical expenses, as more people take advantages of preventative annual doctor visits. However, Barron Discovery Fund thinks the stock might be overpriced at the moment. Here is what they said. We sold our remaining investment in Teladoc Health Inc., one of our most successful investments ever. Our view was that the company's valuation fell a bit extended, and its market capitalization at over $19 billion was too large for the fund to hold. Moreover, we believe that on a pro forma basis, the market cap will be around $40 billion after its recent bid to merge with the Livongo Health Inc., a transaction expected to be completed in the fourth quarter. We hold Teladoc's management in the highest regard and admire the incredible company it's built over the last few years. Number 4. 2U Inc. Cathie Wood had nearly $500 million invested in the stock at the end of September. TWOU shares returned 67% in 2020. Quant hedge fund D.E. Shaw and Greenvale Capital are among the giant hedge fund holders of the stock, but their positions pale compared to ARK Investments. 2U is an education technology company providing front-end and back-end cloud-based SaaS technology services to universities. In August, 2U Inc. and Columbia Engineering announced a partnership to deliver the Columbia Artificial Intelligence Program. The $2.7 billion market cap company aims to be a leader in the digital transformation of the higher education market. There were many insider purchases in TWOU shares back in 2019, when the stock was trading at $15. Those insiders made more than 160% in less than 18 months. Number 5. Zillow Group Inc. Cathie Wood had nearly $500 million invested in this stock, and for the first time today, she doesn't have the largest position in a stock. Karthik Salmas, SRS Management was the largest hedge fund holder of Zillow, with an $871 million position at the end of September. Here is what Barron Partners Fund said about the stock recently. Zillow Group Inc. operates leading U.S. real estate sites, a mortgage marketplace, and the Zillow Offers home buying business. Shares were up on strong second quarter results, driven by record top-of-funnel metrics and a favorable new public comp for the offers business. In our view, Zillow is well positioned to penetrate the large online real estate advertising opportunity with substantial upside from offers, which could grow the company's addressable market in both houses to be bought/sold and leads provided to premier agents, as well as from Zillow Home Loans. We hope you enjoyed today's video. Now that you know where Cathie puts her money, why don't you try your luck? Of course, always do your research. That would be it for today. Thumbs up if you liked it, subs if you loved it. See you next time.